Okay.
Okay, got you.
Yeah. All right. Let me share my screen. Where are we? Screen two. Boom. All right. ACHR. First thing we need to talk about before you looking at that. What is time decay? All right. So when you're trading options, let me show you. This is even better. Oh, too much. All right. Let's just focus on this graph. When you trade an option, this is a graph showing the option value versus time expiration, right? So every time you buy an option, you're fighting against two things. One, you're fighting against the stock going in the opposite direction of you. So let's say we buy some calls, right? We place a bet that the stock is going to go up. So let's say we're looking at $100 stock and we want that $100 stock to go to 150, right? Again, it's two things going against that bet. The two things is that the stock could go down from 100 instead of going up to 150. The stock could go down to 95 and they can go down to 90, so on and so forth, right? It can backpedal. The second thing is time decay. Time decay is never positive. It is decay, right? So it's eating away at the contract every day that the contract doesn't make money, pretty much. So when you're trading options, you have to beat time decay and you actually have to go in the right direction. So for Sean, in your scenario where you said, okay, cool, my stock actually went up 15%. When you're trading options, it's about when does it go up that 15%. If you're just trading stocks, it's okay because stocks, they don't have time decay, right? Stocks don't decay. You can buy a stock today and hold it forever. When you buy an option, since you're picking an expiration date, once you put the expiration date on that contract, the time starts ticking immediately. So your entries and X's have to be spot on, right? When you're trading options, because you can be right about the stock, but if time decay has been so bad on the stock, it doesn't matter. Stock can be green on the week and you charted it out on a week, but if your expiration is only for a week and you're at the bottom of that week, it doesn't even matter. The time decay is so high, and this is the rate, right? So this is if you're looking at this chart is if you're looking at a 9-month contract, right? If you're looking at a 9-month contract, the option value is already at 100 because time decay hasn't started to eat away at the contract, right? And then you can see as this goes from 9 months left on the contract all the way down to 0 months left on the contract, the option value goes down to 0, right? So if you get down to the last day on that contract and you're still holding it, you can be right. But if time decay has eaten up too much of that contract, the value of that contract can be 0 unless you're in the money. In the money is a different situation, but right now we're just talking about time decay. So every time you buy a contract, time decay is eating away at that contract. You follow me so far?
Yeah, so basically it's best to have a larger date.
There you go. Exactly. It's better to have, but guess what comes with a larger date?
Higher prices.
There you go. It's more expensive. Right. So a lot of people like playing weeklies, right? They like to buy a contract on Monday and have it expire on Friday. The thing about it is that if you buy it on Monday, it needs to be moving in the right direction on Monday and Tuesday. If not, let's say it goes down Monday and Tuesday. By Wednesday, you're going to need a half-court shot to make some money. At that point, you just need to get out the trade because the expiration is at the end is on Friday, and then the time decay is moving so fast that it's eating away at the contract.
Right.
The rate of decay is so high that the option going up, you may just break even.
And Sean, that's killed me so many times. I needed one extra day and it just shot up. And I just had to sell out of my Disney. I bought a Disney contract for, I think, 60 days, or maybe it was 3 months. And Disney just dropped. But when it dropped, it sat down at the bottom and consolidated for all that time. So when Disney started flying, people were jumping in and making money. But my contract was now 2 weeks away or a week away. It wasn't moving. It was like 2 cents. You know, I lost money on it.
Okay.
So you got to buy that contract far enough to give you some time if you're unsure. But if you think the contracts are going to go in the right direction fast, then you want a short amount of time. So it's you got to be right.
Mm.
Yep.
Okay.
Yep. So that's what's happening with your contracts. Are you right about the direction? Sure. But are you right about the time that it will actually get there? So with options, it's a little bit more particular. You got to be right about when it's going to get there. And if you don't know, you got to buy a bigger contract. And so the way to mitigate that is to buy a higher strike. So if, for instance, if you wanted to buy, let's say the stock is at $100 and you wanted to buy a call for 150, but you wanted, let's say it expired in a month, but you're like, it might take 2 months, right? You might need to just buy 3 months. And instead of getting a 150 call, since you're going 3 months out, you might want to get a 170 call, right? Because the goal is not to actually hit the number. The goal is just for you to give it enough time to go in that direction, and then you take your percentage and leave. Because if you're waiting for it to actually hit that number, it might not hit that number before expiration. You got me?
Mm-hmm.
So that's the beginning of what's happening. And I think you probably wasn't even paying attention to that, but that's what's starting to happen with your contracts. So you're right about the price is going to, but you wasn't right about the time.
That makes a lot of sense when Ty and Devon asked me, so when is it gonna hit that? It's like, how do I supposed to know? Oh, because of time decay and stop.
Yeah.
Gotcha.
Yep.
But
It definitely matters. It matters if it's going to be there a week, 2 weeks, or a month. Then you know better whether to buy your contracts further out, because it's going to cost you more money. But if you think it's going to be 3 weeks, we don't want to buy a contract for 1 week, because then we would have lost the entire contract amount or it got stopped out.
Exactly. Another thing. So when you're trading and let's say it hits, you got to have a target percentage locked in mind. You can't set that target percentage based on a price. I think that's something that Yvonne and I talk about a lot is, okay, when I'm setting up this trade for an option, am I waiting till the stock hits? Let's say, again, same example. Am I waiting for the stock to go from 100 to 150 to get out? Or am I waiting to hit 30%? Am I waiting to hit 20%? When you trade options, you have to focus on the percent. It's not even on the dollar amount, because for instance, Ty was trading Microsoft, right? Microsoft went up to 440. Let's say if Microsoft went up to 440 twice.
My mistake was that I wanted it to go to 430. I wanted to go to 30%. That was a huge mistake. That was a huge mistake.
Right. So that's why you got to lock in your percentage, right? So if your percentage is 20% and it goes there, you got to take that 20% regardless of what price is hitting that. So it can go up to 440 for a tie. Is at 20%. You have to take that, because guess what? If it goes back down and it goes back up to that same price, guess what? That percent might be 7% now, because time decay it.
Okay.
That makes a lot
of sense, because when I made the target call, you was like, hey, to 20%. And I was like, yeah, like it's gonna keep going up. And then it dropped and then went back up. And I'm like, how does shit say I'm down 10? What the fuck? I was just up 20 last time, but how am I down 10?
I told you, right? Because time decay. It took long, so it hit your target price. You got to take the percent. When it went down, time decay and the fact that it's backpedaling ate up the contract. And then when it came back up, time decay had already eroded a lot of money off the contract. So now you're down, even though you were just back to where you were a few weeks ago. That's why in option trading, as soon as it hits that percentage, you have to take it. When they hit that 20%, and I think 20% is probably the easiest with options. As soon as it hits 20%, you have to take it. If it keeps running after that, cool. But a lot of options are not going to do that. Some may run. Some may hit 20% and then run for 80%. But it'll be just your luck that you think that trade is going to run for 80%. It hit 20 and then it goes down to 50%. So a see profit, take profit. Because again, this is what we're looking at right now, time decay.
Also, can you explain how the contract price affects things? Because that I found confusing. Because with Microsoft, like the strike price was, I think, 425,
Mhm.
right? But then there's the contract price per share,
Mhm.
and that ate into the profits too.
So the question is, how
Premium
does
or the premium, I guess it's called.
right the premium? Yeah, yeah. So you want to know what's the correlation between the price of the actual contract and the price of the stock?
Well, my understanding is that, like, okay, when I bought the Microsoft option,
Mhm.
I thought if the price moved above 425, I would be making money,
Mhm.
right? And I found that it had to actually move in the initial days, in the initial 2 months, it had to move above, I would say, 435 for me to start making money. And
Mhm.
then at 440, I made 20%. That's when I didn't sell. So it was confusing how the math worked.
Yeah. So the math worked. The math worked that way for you because of where you got in. So again, when it comes to options and time decay, it's all about the entry. So it's where did you get in on that? For where was the stock at, and what was the price for that option when you got in and bought the 425 call? Right. That's really going, because someone could have, let's say if you got in the 425 call when the stock was at 420, right? But then somebody else got in the 425 call a week or 2 weeks earlier when the stock was at 410. The person who got in at 410 2 weeks earlier may have a better position on you because they're not running it that tight. So their option is going to start making profit before yours because they had a better entry, right? So it's all about the entry, and then it's about, okay, where do you take profit at? Where do you get out?
Okay, you know how Microsoft was just at 408?
Let's look at Microsoft. Hold on.
Yeah, if we look at because Microsoft today is like what, 419, 418? That was
420.
obvious. Yeah, that was an obvious prediction. That's, for me, that's an obvious prediction.
Yep.
408 to 420 is an obvious prediction, given that it couldn't meet resistance at 420. So that actually, I think, would have been a good option to buy.
Yep. Yeah. The bounce. Yeah. The floor at 408. Yep. A lot of rejections here, 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 even some. Yeah. Yeah.
Throughout the whole chart.
Right. It's bouncing 408 the whole chart. Yep. So that was 408 back up to 420. And 420, you're right. You got two moving averages that's pretty much gonna block you with that 20-day and that 50-day sitting right there together. So yeah, that would have been a good move off of support back to the upside from that 408 support up to 420. Yep. Again,
Okay.
oh, go ahead. Go ahead.
Okay, so the other thing I want to understand is, like, okay, so you lost money on Microsoft. Remember when you said that you thought it could go to 460 earnings?
Yep.
And I sold out of it at a $7 profit. So we made opposite calls. Do you know what I mean? We made opposite calls.
Mm-hmm.
What happened there? Because for me, I was getting nervous. I was getting nervous about earnings,
Mm-hmm.
and I'm seeing the difficulties of other like mega cap companies, missing their earnings. And I was feeling anxious about having another 2.5 months, which I think for options traders is like, I don't know, a lifetime. But for me, I was starting to get anxious. I'm like, I don't like this for 2.5 months. You know what I mean? Like, because if things turn the other way, like I knew that like the depreciation would be leveraged, right? So
Yep.
that I could be down 20, 30, 40% on my option. And I was like, you know what? I don't want that. So that's why I sold out. And actually, I
I
actually
think
sold out. I actually sold out at a loss. I had to call the brokerage and be like, can you waive the brokerage fee? That's how I got out at $7
Get
profit.
the hell out of here.
so. They waived the
I
$10 fee.
yes. I literally got, because I was so irritated
So
at being at a loss.
you were down $3 and they waived the $10
$2
fee.
and $2.50. And I called the company And I was basically like, look, this is my first option. I didn't understand that the fee would be $11.50. Can you waive it for me as a goodwill gesture? And they did. And that's how I ended up with my $7 meat to fight for that profit.
Girl, you are so lucky. You
Right. You would have lost $2, but you came out with 7. That, hey,
hey,
that's a pure hustler right there.
boy, what you do not lose on a trade.
I'm telling you, Vietnamese people are hustlers. I'm telling you. Like, I'm not, my first option in life, I'm not letting it go in the red. So I had to hunt down the stupid brokerage to get that money back.
And the crazy part about that option, Ty, is that it worked. It was 20%. You just didn't take it.
I didn't take it
Nice.
because I thought it worked like stocks, and I thought that it would stay at 440 for a little bit. I thought it would give me time to think.
So
I thought I'd give you time.
all right, well, I'm gonna answer the questions in sequence. So when I did the options play for earnings that I lost on, it was because I was looking at this. The whole time I said, okay, Microsoft is going to be earnings, right? And I said the question about Microsoft is the outlook.
Yeah, the guidance.
Exactly. So I played the earnings, which I was right. They beat earnings on both. I thought that the guidance would also be good as well, but the guidance wasn't bad, but it was just average. It was just normal. Like, yep, and everything is everything. It wasn't like, oh, we're gonna have blah 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 blah. You get what I'm saying? I'm thinking that that's where we're going. So that was my idea and why I played earnings. I knew they were going to beat, so I said, okay, cool. I got something on my side, right? We're looking at these numbers; they're green. They beat on earnings. They beat on revenue. I said, I know Microsoft's not going to miss on that. I should be good. They just need to nail the guidance. The guidance wasn't bad, but when I heard the guidance and they just said, yeah, things are pretty meager, and I'm like, yeah, that's a wrap.
Damn.
I think it was guidance, but I think it's also investor anxiety about the capex spending. So Microsoft, and that's the same thing that got Meta, right? Because you have to think about it. The whole market is being propped up by Nvidia, and who are Nvidia's major customers? Microsoft and Meta, and do you know what I mean? So spending so much money that investors are nervous. That's part of why I think, because really Microsoft and Meta should be trading higher, but it's not because the guidance, and that's directly linked to how much money they're spending. So I think that we kind of just got killed in that avenue. I thought like you that it would basically go to 450 at earnings. I thought it would.
I thought, that's why I played earnings close. But as far as shares, I think we're again still in a good space because the option that you had, it went up to 440 right here in September, and then we got up to 438, right? $2 away from 440. So there's two chances.
But by then I wasn't making money.
Oh yeah, because of this right here.
Yeah, I was breaking even. Right? That's the problem. That when it went to 338, like with the options and time decay and everything, I was just breaking even. And that's when I was starting to get very nervous. Because I'm like, if this thing does not break 440, and then I kind of did a rough calculation in my head, and I was like, because of the time decay, if it doesn't, even if it goes after 440, I'm not going to make that much money anymore. I might as well just not take the risk. And so I just decided to take the risk off the table.
Yeah, it was a 6-week swing. So 6 weeks of time decay pretty much, and the stock dropping down to about 415 or less. And then it came back up to 438. So yeah, time decay was doing this, eating it up the whole time. So yeah, when we set it up somewhere back here in these weeks and it popped up to 440, 20%. Again, that's why I was like, we can't really focus too much on the actual share price unless we're buying shares. If it's a share-based trade, then cool, you can focus on the share price because eventually it'll get up there. You don't have any time decay. You can lose money for a second and then gain it right back at the same clip. But when you're trading options, once it hits that target percentage, you have to take it. You have to, because if you don't, who knows when it's going to go back up there. And sometimes it may not ever come back up there. But I mean, it's Microsoft. It came back up, but it was 6 weeks later, which means you got 6 weeks of time decay, which again ate away at the contract. So again, when you're setting these up, again, this goes, Sean, learn from all of this.
I am.
When you're setting these up, and you can't look at, so Sean, you know how you can chart out a stock and you can say, well, it's going to go to this price point and I'm going to make XYZ percentage. You can't do that with options. You can do that on the actual share price of the stock, but you can't measure out the percentage of the gain that's going to be on it because you don't know the implied volatility. Implied volatility also adds to or takes away from the value of the contract. So when you say it's going to make a move and go up 15%, like you did with ACHR, you were right. But how much was your contract going to be after that?
I don't know.
Exactly.
That's ass.
It is a quicker game. Like it's literally
yeah. I'm getting that because that's how the target was. The target hit, and I was like literally when you said, "Hey, bro, it said 20, great, pull it." I was like,
I told you.
I was like, why would I pull that? Yeah, I was like, why would I do that? I said,
I told you.
Nah. It's gonna do its thing. Let it flag out, and it's gonna continue to whoop the whoop. I'm like, it's going. I got all the way until next year, February. So
no.
Obviously, I figured that part out. Hell no.
So the thing is this, and this goes for you and Ty, right? The worst thing that can happen is that you jump into a trade, you have it set out to January, February, and it actually goes up to your percentage in like 2 days.
Okay.
That's the worst thing to happen because it's the best thing to happen because you just made all your money, boom, just like that. It's the worst thing to happen because you don't know what's going to happen for the life of the contract now. It hit your 20% and you're like, okay, I didn't expect it to hit it in 2 days. I got 3 months left. Do I take it now? Do I wait the 3 months? And the answer always with options is take it now. You can always get back in the option later on, right? Because if you take the money now, like let's say an entire situation, if Ty would have took the 20% and just waited when Microsoft went down, she could have waited till Microsoft went back up and got back in, not worrying about time decay, and made the money back to the upside.
True. Because that's what you said you did with your Tesla car, right?
Exactly.
Oh, okay. Now I'm understanding why you did it like that.
Right. And I'm going to tell you another thing. So when y'all are looking at patterns, the best pattern to play when you're trading reversals on options is a falling wedge.
Right.
The falling wedge is the easiest. Look at this. I called a falling wedge on coin. When did I call this? It was like,
was it on a weekly time frame?
A month ago. Yep. Yeah, I called it on a weekly. I had to go find the video, but I called this falling wedge right here. So we got red candles, green candles up, red candles down. And I said, we're coming out of this. We should be popping back up to go back up to this 250 to 260 level. Right. And so, and it also made an inverted head and shoulders. This is the shoulder, head.
Right.
Almost complete. But I said that this falling wedge was a good point to buy and to stretch it out. We should be going. And what did I say? I got to find that recording. I said, if we break 215 to 220, we're going to fly up to this 250. You can see this gap. I didn't put anything here. There's still points of support and resistance that we could have outlined right here. But I said, if we break, as soon as I saw this wick touch that 220 and reject, I said, the next time, if we hit this, we're flying up to this level. What happened? It came back up, it broke, and just went straight up to where I said and stopped. Right. So when you're trading options, if you can find a falling wedge, easy is one of the easiest things to play. The reason why it's the easiest thing to play is because the premium on the contract is down because nobody wants it. It's falling. Right. And once you play it to the upside, that premium is going to come back, and that implied volatility is going to come back because people are going to want it the higher it goes. So you literally bought it at the best time, and then you get to sell it at the best time when it goes back to the upside.
So in a scenario like, all right, let me give you a falling wedge on a stop. Okay, use the Trump thing, the Trump
DJT, I think.
Yeah. I don't know if it's go to the daily. The daily had the you got it. So the go to the daily because I wasn't on the weekly when I had charted it out. All right, so right there where Yes. So yeah, the last 2 days. No. Right where we are right now. Not so erase the last 3 days, right? So yes, those 4 days of whatchamacallit. So I missed the play, obviously, but it hit the whatever 40, 56% target. So how would you set that option up?
How would I set the option up to play this falling wedge that happened here, like this going down here to bounce back up?
Right.
Let me check the indicators.
Oh, bro, it was grand. It was grand.
I'm like, yeah, the indicators. All right. So one thing that I would have did on this falling wedge is pick the point of reversal, right? So the point of reversal on this falling wedge to me would have been right here.
Mm-hmm.
We got a lot of chop right here, right? What is that? $29. And then $29 will also put us below the 20 MA.
Mm-hmm.
Right. And we know that once it crosses below the 20 MA, there's a high chance that it could reject back up. Right.
Mm-hmm.
So in conjunction with this, we're dropping below the 20. We got this green candle that actually touched that 28 line that we set and it popped back up. That's how I would have played it. If this is a falling wedge, it's coming down because really it's a bull flag, right? This is strong move up, pull down, strong move back out the upside. This is forming a bull flag, right? Which I honestly think is going to keep going at some point. It just pulled back heavily today because people sold out who have been holding for a while, but it bounced hard right here.
Right. How would you? So what would the target price? Because hold up, let me go to.
It depends on the contract setup. So the target price for the contract is not even target price. When you're talking options, it's target percentage.
Okay, cool. Okay, so help me translate how I see the chart to how you would call the option. So what is that shit called? What is that? D what?
DJT.
Okay, so DJT. So DJT. Hold on, let it load. So DJT, let me just look at it. So I had it coming down to whatever that price is. So it's at 29. It's at 29.70. I had it going to dang, Ty, I deleted half of that shit. Hold up, give me a second. Let me redo what I did. 1 1 2 2. Okay, boom. So 1 1 2 2. Okay, so I had it going to 56.19, right?
Yep.
So if I had it charted to go to 56.19, because it was a perfect, like if you look at the 4-hour time frame, it's a perfect falling wedge. Touch bottoms, touch tops, great, beautiful, right?
Mm-hmm.
How would you translate me saying, okay, 29 is the entry, not 56, let's say 54 is let's say 50 is your exit for guaranteed, right? Like good little, I don't know, what is that, like 50, 70, 80% profits, right? On the spot. How would you translate a $29 entry to a $50 exit on a contract? Like, how would that translate to a contract call?
Right. So the way that I think you asked me, like, how would I set this play up?
Yeah, like when you read the contracts, like they be like,
what am I picking?
Yeah, like what's the strike call? Like if I tell you, hey bro, lift is gonna go to $23 from 13, what would be the strike call?
I got you. Yeah. So watch this. All right. When we look at the chart, the first thing I need to know is where is heavy support and where is heavy resistance. Not just level, like again, all of these lines, all of these blue lines are going to be my support and resistance lines. But where are the heavy lines at, right? So when I look at it, 29 and 35 are some heavy lines, right? And when I mean by heavy lines, that we have a lot of action, right? So when we look at 29, I knew 29 was pretty much a definite bounce because we got a cluster of action here, and a start of a candle there, right? So if the stock is going down and it touches this and it pulls back up off of that 29, right? So I'm looking for confirmation off that 29.
Right.
So when it's time for me to set my call, because I think it's going back up towards 50, it doesn't have to hit 50. But again, with options, I just needed to head in that direction, right? The strike that I'm picking if I catch this at 29, if I look and the price is 29 even, I'm picking 35.
Why not 50 though?
The reason why I'm picking a 35 strike is one, it's only $5 or $6 away from the price. Two is that, like I said, I'm looking for heavy lines. 35 is a heavy line, right? So 35 could have been a point to where it rejected. And actually, on this candle right here, we got a wick.
Right.
Exactly, it did. So we got a wick on 35, and then we got two double candles here on 35. We got chop candles here, 35, 35, 35, 35, 35, right? So in my eyes, if I'm going from 29 and I know that this can reach again up towards 50, 35 is one of the safest strikes that I got. And then it's cheap because the stock just went from 54 all the way down to 29. So the implied volatility, the premium on the contract, all of that stuff being added up is going to be low. So once it starts to bounce, 35 is going to be my strike. Now, after it breaks 35 and it runs up, my next level I'm looking at is 44, right? And it actually did exactly that. It hit 44, but then it pulled back. Right? So there's an opportunity to take profit around it actually hitting that. Like it wasn't, and you even got a wick. So it actually went up to 46. So if I got in at 29, my strike is 35, and it actually went up to my next level of my next level of resistance, that's where I'm taking profit. So my resistant levels when I'm trading options are my levels to take profit or to set my entries. So if the stock is at 29, I think it can go up to 35. My strike is 35. If it goes past 35 and it moves up to 44 and it hits my next strike, I'm definitely taking profit here. This is the end of the trade right here for me. I don't need it to go all the way up to 50. Right?
But isn't that more money? Because it did go up to 50. It went past 50.
But yeah, it's more money, but it's also more risk. Because you got to remember, this takes time. You have time.
Okay, I see what you're saying.
Still in the trade, right? Your time decay is still there.
All right, you mind going to the 4 hour?
Yep.
Because you don't got all of the
what, like the extended
sticks. There you go.
Let me see. Hold on. We can change it to Hikinashi. Is that better?
Yeah, it's cool. It's cool. I just wanted to see it. Go.
That's a cup and handle, if you ask me. So it's still going back up there.
No. It already hit. It hit 50. It hit the target.
Well, it's gonna go back there. I think.
Yeah.
This cup and handle right here. This cup handle that came back down to 35. Which again, 35 is a choke point. We're gonna get another test at some point at 44. My entry would be right above 39 at that point, above the 20 for a bounce up to 44, and then next stop 50. But yeah, what were you saying?
So a strike called a 35 from 29. Yeah. Once it goes, because I mean it did rip. It ripped. It took like what? I don't know, probably 2 days to consolidate, I think. And then or a day and a half, one of the two. I can't really recall because I wasn't paying attention to it too heavy because I didn't really care. But it was just a nice falling wedge. That's all I can say. It was a perfect falling wedge. So when it hits 35, the strike call, does that mean that you're in the money? Once it hits 35?
So yeah, if I bought it, if it was at 29 and my strike was 35. And it breaks 35, and let's say it's at, by the time I look at it, it's at 37.50.
Right.
My call is now in the money. So when your call is in the money, time decay is slowed.
Oh, that's where I messed up at. Okay. Oh, see, I put my strike calls at the price that I seen that it was going to.
You can't. Nope.
Damn.
Right.
Ty, why you ain't tell me that? That's messed up, bro. It's messed up, bro.
You blame it on Ty.
I'm blaming it on Ty.
Ty, it was Ty's first option. How are you gonna blame it on her?
I don't care. Yvonne, you should have texted me.
Sean, I'm gonna need you to answer my text faster, and we'll be okay.
So wait, so from the exchange between me and Sean, Ty, Yvonne, are y'all getting more of like what I'm talking about?
So, okay, so your strike price shouldn't be sort of the exit price target. You're saying?
Well, it is, right? What is we buy on support. All right, the way that I trade is I trade reversals, right? I buy because it helps with options, right? I like to buy low, sell high. So if I'm buying at 29, one of my levels to exit is 35, right? The next level to exit, because I'm thinking if I buy 50 contracts, right? I can sell a few at 35, I can sell a few at 44, and then it also depends on my other technicals.
Oh,
right?
you can do that with options?
Yeah, you can buy more than one contract. Yeah.
I mean,
Yeah,
I
when
know
I
it's not more than contract.
when I did that Tesla trade, I had 175 contracts.
So that means, so that means you can partially sell.
I could have sold, yes, I could have sold one every time I wanted to. I could have sold one and then until I was all out of 175.
Oh, I misread it wrong.
But
Oh,
no, wait.
okay.
Buying a contract is also like buying a share. So if I bought 175 contracts and those contracts was $20 a piece, that's still 175 times 20. You get what I'm saying?
Mm-hmm.
So it still works that way. But then that's when you get that multiplication factor that's astronomical, is when that same contract goes from 20 to $70. That's only a $50 change, but then you do 50 times 175, you in the game.
Okay. I might. All right.
And there's a way to extract value out of the contract. Let's say if you buy a bit contract that expires 6 months from now, so you only can buy one, right? You can roll forward and backwards on contract. So rolling a contract means that it does this automatically. It will close your contract and open a new contract and give you a debit or credit, right? So if I'm in a trade and let's say I'm already up on my contract and I'm like, man, I only have one contract, but I want to take profit and the stock can still keep going. I just need to go ahead and I need to lock profits, but stay in the stock, stay in the trade. You can roll your option. So rolling the option is you can roll it up, meaning you can get a higher strike, and then it's going to give you a debit. So whatever that, it may owe you $75, right? That's you taking profit once it gives you a debit. A credit means you got to add more fuel to the fire. You got to add more money to the trade to get a better price. But it also counts as a closed contract while opening a new one, and it's all happening simultaneously.
Okay. All right. Okay. So I can't use that one. I'm looking for an example, a setup. I was going to use Intel, but it already moved. Can't use. Yeah, I can't use Amazon. I can't use none of these.
What are you looking for? A falling wedge?
Yeah, I'm just going through my charts to see if I could find wait, one. Okay, no. I mean everything pumped, so it's like everything already done did, but I found one. Wait, one, two. Okay, I found one. Okay. High, what is this? What the fuck is this shit called? What is it? HYMC. Let's go with that one. HYMC. We got booster versions on it.
This?
Look, let me see.
HY or HI?
HYMC. Yeah, perfect falling wedge. Look at that. Don't it look beautiful? Don't it look good? Don't it look? Go to the 4 hour. Fuck the week. Go to the 4 hour. You ain't gonna see nothing on the week. Go to the 4 hour. It's so sexy. Right. Look at that. Don't that look sexy? Don't that look sexy?
This is yeah, but where are you playing it back up to? 250?
Hold up.
Like you got support here. You got resistance there. You got another level of resistance here.
Hold up, it might.
All right. And then I mean you got a high point right here if you want it at 3. Okay. And if it breaks through the floor, it's only going to drop like 10 cents. And then if it's a massive pullback, it's going to drop down to 2. So this ranges between what, $2 and $3.19. So yeah, this is a falling wedge. Whether the falling wedge, but My only concern would be this 20 going underneath that 50.
The 20 going underneath the 50. Yeah, that is a bearish sign. Well, the 20 going underneath the 50. No, it's not. It's not bad. It's not bad.
I would be worried about. This is the thing that I'm worried about happening right here. And we can see based on this green candle. I would be worried about the fact that this is making a falling wedge, right? It hits this and it bounces up right here. And then by the time it gets here, guess what's coming down? That 20, if that 20 lines up with this, we can also get another rejection back down.
Right, facts.
So it'll block us from ever even getting up.
Right. True.
Right. So that's the only dangerous part I'm worried about, because that is if we look back at the history, that's also support as well. And you also have that 20. If that 20 lines up with that resistance, we're going to get a rejection. That would be the only thing that I'm worried about, is this moving average. So if I'm doing an option, this may not be a falling wedge that I take.
No. I agree with you, because it also is making.
Let me show you a textbook one. This is one that let me see. This is one of the best ones that me and Mark was able to find. Yep. All right. So ignore this line right here. This is a trend line that I placed, and it actually, did we break that? Yep, we broke that. Okay. So Tesla is probably running at 300 now. That what, 288 went up $37. Yeah, it broke that trend line. So we probably heading up to right here where we got a choke point at resistance. But this is a historical resistance, right? So once we get to 300, we're getting rejected. All right, it's at 288. At 300, we rejected here. This is a rejection in what, 2022? This is a rejection in 2021.
Right.
All right, and then this is a rejection in 2023. So every year we get rejected at 300.
Right.
I don't think 2024 is going to be any different. Is it going to be a major rejection? I don't think so, but I do think we could see 260 to 270 again after we reject that 300. The textbook falling wedge, this is where I made the 20K play, right here. So this is what, no, actually right here. This is where I made it, the first drop. So Tesla ran up, hit this point, it was chopping, and then it started to make this falling wedge that landed us right here. So this is the end of December. Yeah, this is December what, 20th. This is where I called a trade, and we can look at it in the Discord. It popped. This is before the split, but it popped from 300 to 355 that same week. The next week, we saw 373. The week after that, we saw 400, right? And this is all off of this wedge that it made. So it hit up here at about 400, came all the way down, and I literally bought it right here. And it popped back up. We got 3 candles, 1, 2, 3, back up here, and that's where I sold. So this is where I turned the $600 to about 8,300, 600 to 8,300, and these 3 candles, 1, 2, 3.
What was the strike price?
My strike price at the time, Tesla was about $950. My strike price was like $1150. Again, this was pre-split.
True.
If you go back and add the splits, then yeah, Tesla was around that price.
Right.
So yeah, I played it, and then this is how you know. So Monday, January 3rd was the first Monday of the year, and that's so every first Monday of the quarter, Tesla presents their vehicle delivery numbers, right? So I played this pop going into earnings because Tesla was making a falling wedge, but then also when Tesla reported their earnings on January 3rd, that's when it exploded for me. I got out the next day, I played forward. And then I turned the next day when I played forward, I put the 8,300 and don't do this. I put all of the money I made from that trade into a day trade, and I made 150% at 8,300 for like $12,000. So I made like 12. That's when I made the 12,000 in like an hour. But yeah, falling wedges for options is my cheat code.
And you saying that you don't, so when you your strike price is basically like at a decent resistance.
Yeah, it needs to be at a fair resistance. Yeah.
Okay.
It doesn't have to be sky high.
Like
When I got out of 8,300, honestly, if I would have stayed in, it went for 11,000. So I could have turned the 600 to 11,000. But after holding it for like 2 weeks, I was like, all right, I'm tired. It's at 8,300. I spent 600. I'm out. And then that's when I made the next trade the next day. But yeah, so falling wedges is the trick. That is the trick.
Right.
It's like this one. It's like this one right here. Look at this. Look at this. It hit 260, came down, exploded back to the upside. That's why I trade reversals. I like, and again, it works for options because if you're playing a reversal, that stock is down, the premium is down, the contracts are cheap, and when it pops to the upside, you catch that rift from the implied volatility. And the only thing you need to do is just watch your nearest resistance. You don't have to play it all the way up to resistance because you may be targeting that percent, but you do need to watch that resistance because you're probably gonna get a rejection there if you're getting close.
Right.
I like this.
Yeah. LJ, I have a question too.
Yep.
I played the coin before earnings, and it was a few days before earnings. I'm going to send you this because I switched over to a different platform, and I'm trying to read it. When I got in, it went up, but I think those two red candles right before it popped, it went down. I don't know if I'm up or down from reading this platform. If I'm up over what I put in there, can I send it just a screenshot to your?
Yeah, you can DM it to me. Yeah.
Yeah. Okay. I think I just said it.
Okay. And you want to know?
Can you explain what that is doing? I'm like, am I winning on this or not? I see it's green.
Yeah, you
I
are.
think I am.
Oh yeah, you're doing good.
And it's out till December, but should I take profit and get out if I am green on that?
Yeah, it looked like on the day you made 1,600. You're up
You can put it up.
390.
Put the whole thing and explain each thing to us.
Let me save the image. Can I do that? Yeah. Okay. Where did it go? Okay. Let me drag this. Oh, I had to. Let me stop sharing that screen. Hold on. And then share the image screen. Yvonne put me to work.
Literally.
I'm trying to find the image. Oh, okay.
We gotta know if we're going in the right direction.
Uh,
I lost enough money.
Yeesh. All right. Can y'all see this?
We don't see anything.
You don't see anything?
You gotta share it. Or
I am.
Oh, you are prison. You might gotta put it on you might gotta do the window or
Wait, what are y'all seeing?
black. Well,
Black
I see
screen.
I see you clicking on something, but it's a black screen, but it's like an outline of the image, if that makes sense.
Can you see the image now?
Nope. We see that you're sharing your screen, like you're sharing the Google Meet screen.
All right, hold on. I think I know what I'm doing now. Share the entire screen.
Oh wow, Yvonne, you're everywhere.
Here you go. Now, can you see it now?
Yeah.
Y'all can see this picture. Okay. So looking at this, your PL on the day, you made 1,600, right? 1,680. This right here. Right. What did you spend on the contract? It looks like it's not telling me.
I think the 12.25 maybe.
Trade price is 12.25. No, that's not right.
That's not right.
So if you did the 12.25 plus the 891 and you
I
made
didn't explain. I don't understand it. this whole
Yeah, I
thing.
don't understand. Yeah, I'm trying to see what did you. Is there any other screen that this is the only screen they gave you for this trade?
Yeah, that's the one on my phone.
So the value of the contract right now, it looks like it's 20.95,
Okay.
right?
I think I picked a 270 strike price.
Yep,
I think.
right here.
And is the price right now at 283?
Nope.
Is that what that means? What does that mean then?
The 283 may be what you need to be in the money at.
Ah.
Oh, gotcha.
283 puts you in the money, even though the strike is 270 because of your entry. That's why I want to know, where did you buy it in at? Yeah, your strike right here, coin, you got a December 20th expiration with a 200, it's a 270 call. So that's right. Yeah, your strike is 270, but I don't know where you bought in at. But regardless, since it went up 31%, your contract is up 392%.
Okay,
So,
but I lost. It's up that today, but it was down for the last couple of days. Like
yeah,
I
you're
bought it and the
still,
next day it dropped. So I don't know if I'm up. That's why I was like, I don't know
no,
if I'm
you're
up.
up today for sure. Sell it. You're up. The stock is up 31%. You're up for sure. You're not down.
Okay, because the
This
reason
is,
I bought out till December is because you said it could get to.
it
No,
can
no,
go
no,
back
sell
to,
it.
yeah, I said that it was going back up to 250, or you can't, I'm looking at my chart. I said that it was going, I said after it breaks 215 to 220, it's going back up to the 250 to 260 range. Right now it's at 255. So it's right
I
smack
think
dab in the middle of where I said it would be. I mean, you're at, wait, why is it still zooming in? All right. Yeah, I would take profit for sure. You're already up. The stock moved up 31% in a day. And it's literally right where we said the stock will move up. So even regardless of the percentage, it landed right in between where we said it would. On my chart, I got 252 for the first level of resistance and 260 as the second level. Right now it's at 254, right in between it.
Okay, was it higher than that today?
Yep, it got a wick. It went up to about 257, 258, somewhere around there.
I think once every 4 years.
I didn't hear you, Ty.
Oh, I'm saying you get a new president once every 4 years. Just sell it. Like, this is unprecedented. Just
Right. Yeah, I would sell it for sure. That's Merry Christmas.
Got you.
Yeah. A 30% pop on a stock that's not even earnings. That's a present.
Yeah, I got that. You said coin. I was watching your the Discord, and you talked about coin and Microsoft. So I bought coin and Microsoft, but Microsoft went down. But and coin went down too, but coin popped, of course, today or yesterday.
Yep. And Microsoft is back at 420. What is it doing now? Let me see. I don't know what's going on with Microsoft, but they don't have any. Yeah, I'll have to read news on them, but they're back up to 420. My only issue with Microsoft right now is pulling up and consolidating for a move. Like last time it did this, you see it consolidated here, and then eventually it tested that top. Let me zoom in. So I'm sorry. It was doing the same thing here from January until June.
Can you share your screen? We can't see
Oh,
anything.
hold on. I was not sure. All right, my bad. Here we go. There we go. So from January, what is it? January to June, it was doing the same thing, just bouncing around between 400, that's 398, 399, 400 to 427, bouncing around in between, and then it broke with strength, put it up to 442, went up to 450, and then up to 467, and then it sold off, stayed within that range, and it's doing the same thing, bouncing within the same range. 400 to this time is really testing the upper limits at 430. So it's just bouncing around. It's doing the same thing it was just doing right here. Bouncing around, bouncing around, bouncing around. And it keeps testing, even though it's rejecting, it keeps testing this resistance between 427 and 432. Eventually it's going to break through like it did here. We got a lot of tests right here at 428. Rejected, came back, test, rejected, broke through. So that's what I'm seeing. A lot of consolidation happening. Doesn't mean that it won't get up there. I think it's going to get up there for sure. It's just been consolidating within the same range. Like Ty said, when it went down to 408, she knew it was going back up to 420, and then boom, popped right back up to 420. But yeah, coin was making a different pattern. This is going into consolidation. But I think that eventually, once it breaks out of this consolidation, it's going to move higher. Again, we can even look here. It consolidated from May to November. So this is like 5 months in consolidation, and it's doing it in blocks. This is what, May to November. What's that? 6 months actually. So May to November, that's actually 5 months. That is the end of May. So May to November, 5 months, breakout. Got up here from January to June, 5 months, breakout. Here, August, and we're what, November, still consolidating. We may get to that 5th month, another breakout. So it's done that twice. 5 months, breakout. 5 months, breakout. This is like the 3rd month, I want to say. And it's still testing that upper limit for a potential breakout. If we test and we break 450, we get back up here, we get a new all-time high. But that's what I see happening with Microsoft. Now, the timing of the entries and things of that nature for options may be a bit off because it's going into a consolidation pattern. And we thought that it would move with the market, but it hasn't been. It's just been consolidating. So I think that's been the issue here. Now, coin was making a falling wedge. Huh?
It's out. It'll probably break out by the next earnings, around the next earnings.
Yep. So yeah, coin and Microsoft are doing two different things. Coin was making a falling wedge, popped out, and then landed again right back where we said it would. That's why I don't have anything.
Where do you see it going? Where do you see it going? Like, because what I'm trying to understand is like, I get that Trump is good for the market, but this just seems really unprecedented. Everything skyrocketing today just seems, for me, overdone. So I'm like, okay, where does gravity settle in? You know what I mean? Trump getting into office is what pushed Nvidia to all-time highs. Trump getting into office is what's giving this 31%. Like, is this sustainable?
No, I don't think it is. But euphoria doesn't have any limits, right? This can run. So when I say this, I mean the whole Trump thing can run for a second, but eventually people are going to take profits. So this 31%, you think about it. People who bought this at 148 down here, they're up. They're up above $100 a share. You think they're just going to keep holding? They're taking profits at some point. And I think 250 to 260 is the area that they're probably going to take profits. Is it going to be massive profits? I don't think so. But I can't see us get another candle of this size to follow up behind this.
You can't.
People are about to short this down for sure.
It's a third of the company's value. You can't get another 30. That's insane. It's insanity.
Right.
That'd
So
be like
I mean, but people, this is, again, I think I told somebody a few days ago that I thought whoever won, the market was going to go up. I think I said that to somebody. I said, no, it doesn't matter who wins. This is one of the hottest years for the market in a while, almost ever, I think, based on research. But yeah, I think that, and then, I mean, this is just a giant bull flag, if you're going to be honest. From 72 to 275, that's a $200. Yeah, this is a bull flag. Again, if we do this is an inverted head and shoulders. Shoulder 1, it's a flat head. Shoulder 2, it breaks 260. You see, I got this line all the way up here at 375.
Yeah, that's the last high. Yeah.
Yep. I think we're going to get there. It's like,
I mean, it's never recovered from its IPO. its IPO was like what? It's never come back to its highest point.
It's gonna get there. Again, I think Coinbase is $1,000 stock. I've been saying that for the longest, and I still believe that. It's like saying, do you think Bitcoin is going to hit 100K? Yes, sure. I think Bitcoin.
No, the question isn't about Bitcoin hitting 100K or 200K. The question is, how long is it going to stay there, and where is it going to go after?
I think Bitcoin slows around like 150, 175.
I mean, with Trump in power this time, right?
Yeah. Yep. Somebody just texted me and asked me, do they think they should buy? Do I think that Bitcoin is a good buy?
I think Coinbase is a better buy, but okay.
Yeah, Coinbase, you have better growth. If this is at 250, it goes to 400. That's 4x.
Yeah, you have better growth, and not just that, but it leverages the whole entire crypto space, whereas Bitcoin is just Bitcoin. It's it's a storage asset. Like, it's not the same thing. I would rather invest in Coinbase than Bitcoin.
You said you wouldn't?
I would rather do Coinbase than Bitcoin.
Oh yeah. It's
It's
better value, more regulation. They actually have earnings. Bitcoin doesn't have earnings.
Yeah, it's much better. I don't think that I didn't see this. I knew that the market would pop. I didn't think it would pop like this. This was like, it actually kind of rattled me. And I sold some of my today because I was rattled.
No, I know, but I said it could happen because, again, look at the action that happened here. Same thing. This gap. I said, hey, if it breaks, I'm gonna find that video and post it in the Discord. I think it was a few Sundays ago. But I said, if it breaks this 220 to 215, it's covering this gap. That's why I didn't even worry about putting resistance in there. I said, this is getting covered. And we got that MACD crossover. Yeah, so
why would I sell now then if I have it till December? Why would I?
Because you're in profit. Yvonne,
also,
you're in profit, and time decay is not your friend.
Also, this is an unprecedented move.
It's not gonna do this again.
This is like when do stocks post 30% profits? They don't unless it's Reddit. Because Reddit is a new IPO. Like, this is unprecedented.
Yvonne, I think the strategy is this. You could, again, do what you want. This is not financial advice. If you take the profits now, you don't have to worry about time decay. And once it pulls back, you can find a better footing at a cheaper price, and you can keep some profits.
Also, this is what I learned in terms of being an investor, right? A bird in the hand is always better than two in the bush. Always remember that.
Gotcha.
Right.
Well, Ladarius, would it be better to roll the contract?
In my opinion, I wouldn't. That's just my opinion. If it was me, I'm up 300%. I'm taking everything and just waiting.
Okay.
God is not going to give you 300%.
Yeah, that's what I'm saying. You were in the right place at the right time with the right contract. This is
like you're making a handshake with the devil. You just take your money.
right. Yeah. I wouldn't try, because again, what happens is up 31%. What happens when it has a 10% correction? Right? It pulls back $25 back down to 225. Then it's gonna be like, I should have took it. Right?
Yeah, you're right.
Again, in the option game, when you see profit, take profit.
Take profit.
You have to take it. Again, you got time. You got more going against you than going for you in the option game.
Yep, I got it. I'll sell it tomorrow.
Cool.
So, Ladir, did I make a mistake? Okay, I spoke to Sean about this, but I had bought into Coinbase at 233. I sold it around 243. I just was like at 24%. I just sold off my shares. I just said, you know what? I've taken a measly bit of profit. This is unprecedented. I'm out.
Yeah, I mean, you're not wrong. I don't think nothing's wrong with that. Like again, now taking all of your, it depends on how you see the stock. Like if you see the stock actually going to $1,000, take it like completely getting out of the stock. Like if I see the stock going to $1,000, I'm not completely getting out. I'm shaving that profit. So if it's up 25%, I'm selling 25% of my position, but I'm leaving the rest in. That's how I would do it. I'm not completely getting out if I know that it can continue to run. And then the profits that I put to the side, if the stock pulls back, I'm just putting those profits back in to give me a better average when it pulls back. That's how I think about it.
Yeah, you're creating a long and trying to build a position. I get it.
Right. Yep. I'm just stacking the bricks in my favor.
Well, that's what I tried to do with Micron. So I sold 30. I sold like, yeah, I sold like 30% of my shares.
Mhm.
My buy point was 105, and I sold them at 110.50.
Mhm.
I kept the majority of my shares. I kept the majority. I took some profit. That may have been a mistake.
We'll see. We'll see. It looks like it could go up to that 120 again. Let me see. Is it maxed out? 53 on a weekly. Did the MACD crossover? Yep. Just started an uptrend. The stochastics is pretty high, but this is a weekly stochastics. It's at 81. It can go 20 or 19 more points up to 100. And I mean, if it goes up to really, if this stochastics goes up to 100, this will really would be at like 130, 140. So it doesn't even have to go up that high. But are we limited on the day? Nope. Look at this. Yeah. This is probably going up to, yeah, that's a choke point at what, 112. If it can break, yeah, if it breaks this 112, we can see 120. After 120, we can see 130. 60 on the stochastics, kind of high. I like 45, 55. But with this Pendamacti crossover right here, and then with the climbing stochastics only at 50. So if this pops, we got enough space on the week and day in conjunction to get a run up to 120, 130. Let me look and see, are we limited on the 4-hour? Nope, 4-hour, we still got space at 65 on the RSI. Again, we can squeeze it up 5 more points, and then we can better see this choke point right here at 112 that it kind of wicked out at today. But then we did get that MACD crossover to the upside, and then that stochastics is at 97. So we might get some consolidation. We might get some consolidation again at this choke point. But if we look at the day, we need a little thrust. We get that MACD crossover, and we got space on the week. So this may take a little time to happen. And then this one is consolidating. This is making a little short flag. It popped up from 88. It's flagging out right here. It keeps bouncing around between 106 and 112. You can see we got 1, 2, 3, 4, 5, 6 candles. So for 6 weeks, it's just been bouncing around between 106 and 112. But with this MACD crossover that we just got, it puts us in a buy trend. And then the RSI is at 53 on the week. So it's making a little baby bull flag again that I'm seeing could potentially take us up to 120 to 130. Only thing we need to get right is that 4-hour. Space on the day, space on the week. That 4-hour stochastics would be the only thing that I would be worried about if I'm looking at this trade.
Thank you.
No problem. Oh, let me stop this recording.
Ladarius, are there any other to get through the rest of the week that we should be looking at?